This is a recording of the June 13th, 2025 Budget Revision 101 training. During this training, we'll review how the budget is built, budget authority, types of budget revisions, and completing budget revisions. This training does act as a part 1. Later this year, we will host the second part of this training, which will include information on reporting and budgeting for new grant awards, budget deviations, IT projects, reports, and other topics. Today, we'll start with how the budget is built and what makes up the amounts you'll see reflected in various budget reports. The state of North Carolina operates on a biennial budget cycle, which begins in July of odd-numbered years and ends in June of the next odd-numbered year. We are about to enter the first year of the biennium, which begins on July 1. The biennium generally begins with the passage of a current appropriations act by the General Assembly, which appropriates the base budget for both years of the biennium and may make changes to that base in the form of expansion or reduction items. Once a current appropriations act becomes law, OSBM will work with agencies to certify the budget enacted by the General Assembly, reflected in the BD 307 report, and transmit that to NCFS. Next, repeat revisions, which are recurring revisions approved in the previous year but not included in the base budget, are pulled through to the current year budget and IBIS and NCFS. Following that, agencies may begin adjusting their budget as authorized by law. Year 2 proceeds in a similar manner to Year 1. The General Assembly may choose, but is not required, to make adjustments to the second year budget in a current appropriations act. And instead of repeat revisions interfacing following certification, Year 1 revisions with Year 2 amounts, which will already be reflected in IBIS, will be sent to NCFS following certification so that the two systems reconcile. If the General Assembly does not approve a budget by July 1 of an odd-numbered year, the state will operate under a continuing resolution outlined in GS 143C 54B. An agency's authorized funding level would be equal to the recurring certified funding in the prior fiscal year. Additionally, vacant positions subject to elimination in the House, Senate, or conference budget may not be filled after June 30th. And state employees shall not receive salary increases among other allowances and limitations in operating under a continuing resolution. OSBM will send out continuing resolution memo with additional guidance for state agencies in anticipation of the state operating under a continuing resolution beginning July 1. The budget certification process ensures the budget enacted by the General Assembly is appropriately reflected in IBIS. The BD 307, or the Certified Budget Report, is a static report in IBIS that reflects the budget as enacted by the General Assembly. This should not be confused with the Certified Budget column on the RK 325 and BD 701 reports. An agency's certified budget, as reflected in the RK 325 and BD 701 reports, is the budget as enacted by the General Assembly, but includes adjustments required by law, which may include distributions of reserves appropriated by the General Assembly. An agency's authorized budget, however, which is sometimes referred to as a working budget, is equal to the certified budget plus adjustments authorized but not required by law. In other terms, your certified budget is the RK 325 and 701 report amount. Is the 325 701 reports is the BD 307 plus adjustments from 11 type revisions, whereas your authorized budget is the BD 307 plus adjustments from 11, 12, and 14 type revisions. This slide shows another way of representing how those BD 307 and RK 325 reports are built and what components are included to get to the amounts you see in those reports. Now that we've discussed how budget amounts are derived, let's discuss the NCFS chart of accounts. The state transitioned to NCFS in October of 2023, which included use of a new chart of account structure. While there are many new chart of account segments, not all are required to be used by agencies. I'll also note that the level at which your agency may need or want to account for expenditures and receipts may not necessarily be the level at which you need to or should be budgeting at. Please reach out to your budget execution analyst if you would like to discuss the level at which you're budgeting at. Other than your agency segment, the broadest level of the chart of accounts is budget code. An agency's general fund budget code typically houses the majority of expenditures and receipts for the agency, including state appropriation, receipt, and federal expenditures. General fund cash authorized to your agency is requested via the IBIS allotment form, and all cash remaining in an agency's general fund budget code at the end of a fiscal year is subject to reversion. An agency may also have special budget codes, which may have been established by law or authorized by the director of the budget. This table includes descriptions of special enterprise internal service and trust funds, which are defined by GS 143C 1-3. Two-type special budget codes are the most common type of special funds for most agencies. The statewide chart of accounts is maintained by the Office of the State Controller, but expenditures and revenue account groups are listed here for your reference. On the right side of the slide, you'll see the full list of chart of account segments in NCFS. Budget fund, AMU, agency program, and project are unique to each agency, with the latter three being available for use at the discretion of each agency. Additionally, the program field can be leveraged for life-to-date reporting in NCFS. If your agency is interested in exploring this functionality, please reach out to your budget execution analyst. The fund source and interfund segments are required in certain instances. Fund source is required for salary and benefit accounts, the first digit indicating source of funds, either state general fund, receipts, or federal, and the last two digits may be used to indicate grant year for federal and/or receipt expenditures. The interfund segment is required for all transfer lines, which are your 581 and your 481 accounts, and should represent the budget fund where funds will be transferred from or to. Next, we'll discuss budget authority. This is the most important consideration when an agency is seeking to adjust their budget. The three main sources of budget authority include the North Carolina Constitution, the State Budget Act, as well as other general and agency-specific statutes and/or session laws. The North Carolina Constitution requires that the governor prepare and recommend a comprehensive budget to the General Assembly, administer the budget enacted by the General Assembly, and maintain a balanced budget at all times. General statute may provide broad or specific authority relevant to finance and budget. On the left side of the screen, you'll see a portion of the State Budget Act, which provides more broad authority to agencies, whereas the example on the right side of the screen is a very specific example for a specific fund that clearly outlines the use of those funds that are authorized. The State Budget Act outlines the responsibilities of the governor in their role as director of the budget, including authority related to the administration of the budget. GS 143C provides some authority for OSBM agencies and UNC institutions to make budget adjustments in certain circumstances. Here we pulled out subsections B1 through B3 of GS 143C 6-4. Which provide different authority for budget adjustments. Your subsection B1 authorizes agencies to make realignments between accounts within a single budget fund. This authority may be relevant to agencies seeking to make budget adjustments within a fund on Type 12 or Type 14 revisions. Subsection B2 is much more narrow authority, as it allows agencies to overexpend during extraordinary events and/or emergencies. This is likely to be less often used by most agencies. Subsection B3 authorizes over expenditures due to unforeseen circumstances if all of the following conditions are met, That includes the over expenditure is required to continue the program, the scope of the program is not increased, and the over expenditure is authorized on a non-recurring basis for 1 year, except for in the case that it's for a salary adjustment authorized by law, like the LI, or the establishment of time-limited positions funded with agency receipts. This subsection would allow for realignments across funds. GS 143B10 provides authority to department heads to reorganize their agency through the creation or abolishment of divisions and other administrative units. Reorganizations must be reported to the General Assembly within 30 days of the reorganization. This statute also provides department heads with general authority over positions in their agencies, so long as they comply with the State Budget Act and the Human Resources Act. Revisions submitted under this authority should include a statement from the head of the department approving the action. Session law may also provide budget guidance or authority to agencies. Agencies should review all provisions in the Appropriations Act related to their agencies to ensure all actions comply with law. Specifically, agencies should review provisions that follow the money, which clarify budget items in the conference report, and policy provisions that may have a fiscal or budgetary impact. Agencies should also review general provisions at the start of the bill and statewide provisions like for salaries and benefits. Now that we've discussed sources of budget authority, let's shift to how an agency would make an authorized adjustment to their budget. Budget revisions and IBIS are the mechanism by which an agency would adjust their budget. When an agency prepares a budget revision, 3 main questions should be considered: what the agency is trying to accomplish, why the adjustment is needed, and most importantly, what specific authority allows that adjustment. The nature of the adjustment and the authority that allows for that adjustment will determine what type of revision should be used. There are 3 types of operating revisions, but before we walk through them, please note that revisions should be focused and clear. Distinct actions should generally be completed on a single budget revision with no unrelated adjustments on it. Clear and concise revisions will often lead to quicker approval by OSBM and less back and forth on revisions. The first type of revision is the Type 11 revision. These revisions should be completed for actions that are required by law, which may include distributions from reserves appropriated by the General Assembly. These revisions will be reflected in both your authorized and certified columns on your budget reports. The next type of revision is a Type 12. These revisions should be completed for actions authorized but not required by law. Most adjustments an agency makes via budget revision will likely fall into this category. Finally, similar to Type 12 revisions, Type 14 revisions should be completed for actions authorized but not required by law. And for types of adjustments, OSBM has delegated the authority to agencies to complete them without prior approval by OSBM. Please note that we do periodically review Type 14 revisions completed to ensure that they comply with the delegated authority. Adjustments made on Type 14 revisions only impact the authorized budget columns of your reports, similar to your Type 12 revisions. Today, we'll discuss updated Type 14 guidance effective beginning with fiscal year 26. Revisions. All fiscal year 25 revisions to close out the year should be completed as Type 14s should comply with the current delegated authority. In the next few slides, I'll indicate what is new, unchanged, or perhaps a clarification of the current Type 14 authority. Beginning with new guidance for Type 14s is that agencies are able to now do recurring revisions on Type 14s. Recurring revisions should only be done on a Type 14 for realignments between AMU agency program and project segments within a single account and budget fund. Recurring revisions may also be done on a Type 14 for realignments between your 5.2 to 5.5 account groups within a single budget fund. As a note, these revisions will be subject to OSBM review before they are included in the next base budget development process. This unchanged from previous guidance, non-recurring revisions are still allowed on type 14. Revisions for realignments between your 5.1 to 5.5 account groups within a single budget fund, as well as for increases to receipts and related expenditures up to a dollar limit that we'll discuss in a couple of slides. To provide some clarification on what adjustments are allowed for NCFS segments on type 14 revisions, on the left side, you'll see allowable circumstances, and on the right side, you'll see some prohibited adjustments. So on a type 14, an agency may do realignments between AMU agency program and agency project segments within the same account and budget fund or purpose. Additionally, agencies may do realignments within fund source groups. So this would be an adjustment, say, from the 3,000 fund source to a 3024 fund source to clarify the grant year. A couple of actions that are prohibited on type 14 include adjustments to interfund segments for your 481 and 581 accounts. This is not allowed on a type 14 and would need to be submitted to OSBM on a type 12 revision. Additionally, no movements between fund source groups, so this would be movements from a 1,000 to a 2,000 fund source group, would be allowed on a type 14. Those adjustments would need to be submitted to OSBM on a type 12 revision. Some clarifications around requirement adjustments that are allowed on type 14 revisions. To clarify, there is no dollar limit on your movements between your 5.1 to 5.5 account groups within a single budget fund on type 14s. Additionally, there should be no adjustments to individual accounts in the 5.6 to 5.8 account groups. These are your grants, your reserves, and your transfers. Additionally, a clarification for lap salary would be that lap salary must be moved for a single year. Agencies can not do 2-year revisions that budget lap salary use. As a reminder, agencies can budget up to 50% of last year's actual lap salary proactively, but OSBM must review the analysis that the agency has done before that revision is approved. A new change to your receipt adjustments is an increase to the threshold. Starting in fiscal year 26, OSBM is increasing that threshold, and the threshold will be determined by budget code based on your BD 307 certified receipts. For certified receipts budgets at a budget code level less than $100 million, an agency may adjust receipts up to $25,000 on a single type 14 budget revision. Whereas if a budget code's certified receipts are equal to or greater than $100 million, the agency may make adjustments to receipts up to $100,000 per type 14 budget revision. The OSBM budget manual will be updated in July 2025 to reflect this change, but again, noting that agencies may not use this expanded authority until fiscal year 26 revisions. That means that all type 14 revisions for fiscal year 25 should comply with the existing $5,000 receipts adjustment threshold. This slide provides an overview of the 3 types of revisions, how they impact your budget report, whether or not OSBM approval is required, as well as a brief description on what types of actions are allowed on those budget revisions. Now I'll pass it on to Unica, who will go over completing budget revisions.
Thank you, Taylor. On this side of the presentation, we'll be going over on how to complete a budget revision. Next slide. We'll be going over the purpose of the revision requirements, special funds, common errors that are found on budget revisions, and a couple of examples. When creating a budget revision, you know that you need to make an adjustment to your budget. But what type of adjustment is needed? Is it a realignment? Are you establishing a position? Are you budgeting up a federal grant, consolidating a fund? What will be accomplished if this revision is approved, other than undesirable negatives on your 701 report? How does adjustment benefit your agency? Most importantly, does your agency have the authority to make the adjustment? After you have thought through this process, you will have a better outcome in creating your budget revision. In creating your budget revision, you want to make sure your basic information form is correct. You want to ask yourself, once you have finished answering the information, is the revision in the correct fiscal year? Is the revision on the correct type of revision? Is the revision recurring or non-recurring? Does the title make sense with the type of action of the revision? On the next slide, I will go over how to make sure you have a descriptive title in your budget revision. Having a descriptive title gives OSBM clarity of the action on the revision. If the characters allow, these keywords will help make your title more descriptive. You want to include your budget fund, your program, the type of action, whether you are abolishing, establishing, or creating, the recurrence, whether it's recurring or not recurring, and the month, if applicable. Having these keywords is the only searchable tool in IBIS that makes your revision searchable. The category field is very important when selecting the category of your budget revision. IBIS has a component where it generates reports based on the type of category that's selected on your revision. I'm not going to go over each type of category, but the most important category is when you have lapsed salary revision. Anytime you have a lapsed salary revision, you want to make sure the lapsed salary category is selected and whether it's appropriated or receipts, because those reports are sent to the General Assembly for their awareness of agency use of lapse. In the budget revision, agencies must have complete justification. This is a template of how agencies will need to complete their justification in the new fiscal year. This template will help OSBM better understand what the agency is trying to do in the revision. The purpose, agencies will need to explain what is happening in the revision. Authority, this is very important. Agencies need to be able to list the session law, general statute, or agency statute that authorize the budget action. The reason why this is important because IBIS keeps an historical record of revisions just in case the revision needs to be pulled to see if they comply with the state law. The source of funds. List and explain the source of funds that is being budgeted. For example, if it's receipt, list the type of receipt, federal grant child nutrition receipts. If it's a state appropriation, list the session law and the item that appropriated these funds that's being budgeted. Reciprocal, if there is a reciprocal revision, list the budget revision number. If not, simply list not applicable. Attachments, describe the attachments that supports the revision. As mentioned before, this outline of the justification is very helpful when justifying the need for the revision. We will be requiring agencies to use this template starting the new fiscal year. There are two dates that are on the budget revisions, the effective date and the approval date. The effective date is the point of the year the budget revision will take effect. The approval date is when the revision will affect budget reports. Revisions that is executed by a specific item in the session law, the effective date should be the date the bill was signed. An example of this is the items that were in the Hurricane Helene disaster relief bill. Otherwise, revisions will normally be effective on July 1. Position actions effective date must match the date that is in the create new position action in the Fury payroll system. If the effective date is not 7/1, then the requirements and receipts should be prorated for the current year and annualized for year 2 if it's a recurring revision. The annualization column activates any recurring revisions that have an effective date other than 7/1 through pulled into IBIS in the next biennium. If the annualization column is left blank, then no budget will be copied into the new fiscal year. This slide is an example of a budget revision. You have a descriptive budget fund title, effective date is correct, Your revision is on the correct type. The justification template and is complete. Your budget details are correct and it reconciles. You use the correct SCFS chart of accounts and your attachments is described. This is a checkpoint when making sure your budget revisions is complete and accurate. Next slide. Annualization column is utilized when revisions is recurring and has a non-7/1 effective date. This is an example of a position revision with an effective date of 7/1. The annualized column is not required. Position 2 has an effective date of 12/1. The current year budget salary amount is prorated and the annualized column will be required.
Next, we will continue our discussion of special funds revisions. Earlier, you were shown different types of special funds as defined by GS 143C-1-3. These non-general funds are for budgets supported by the proceeds of specific revenue sources and are legally restricted for specific purposes or services performed by the agency. These funds generally do not revert and carry fund balances across fiscal years for use. Fund balance may be composed of receipts that support the fund, general fund appropriations that created the fund, or interest if applicable. Fund balance unspent at the end of a fiscal year will remain in the fund and be reflected as the starting balance at the beginning of the next fiscal year. This is an example of how fund balance is carried across fiscal years. As you can see, year 1 ending balance is the same as year 2 beginning balance. A few common revisions that we usually see in special funds are establishing annual budget for non-recurrent expenditures. Some special funds do not have a recurring budget structure for various reasons. In those instances, an agency may need to establish their annual budget at the beginning of the year. This is often the case for special funds that aren't funded with recurring receipts. These revisions may budget positions or other operating expenditures. They may budget the full remaining balance of a fund or a portion of the remaining fund balance, depending on anticipated annual expenditures. Next, we have realigning expenditures, budgeting fund balance. When preparing revisions using fund balance, the fund should be available for expenditure in the fund, and the agency should demonstrate clear authority to use those funds. Budgeting current year receipts. This may include budgeting over realized receipts for expenditures. General statute or session law may direct how special funds may be used. In this example, GS 143B-135-188 for the North Carolina Aquarium Fund, you can see in this highlighted area that it specifically states that it was created as a special fund and how the fund shall be used. This next example is from Session Law 2023-134. This provision specifically appropriates the funds to a specific special fund, a Type 2 budget code, and it also specifies the amount of the appropriation and what the funds shall be used for. Any revisions that do not comply with those specified uses will not be allowed. There are certain instances where the General Assembly doesn't specifically budget to a special fund, but the director of the budget may direct an agency to transfer funds to a special fund and account for the expenditures there. This is most often the case with appropriations that are not subject to reversions for several years, including past the end of the biennium, or are available until expended. For example, Helene funds were appropriated by the General Assembly, not specifically to special funds, but OSBM directed agencies to spend and account for these funds in special funds as they will not revert until June 30th, 2030. And now back to you, Nika, for reviewing revisions for submission.
Common errors that I find on budget revisions is using the wrong authority. You want to make sure that your authority is correct and complete and is cited on the budget revision. Realigning between the 5.6 and 5.8 accounts on the Type 14 budget revision. This cannot be done on the Type 14 budget revision. Realigning within or between funds that impact individual grant aid account 5.6 or reserve 5.7 or your intro agency transfer accounts 5.8 is required on a Type 11 or a Type 12 budget revision and has to be approved by OSBM. Budgeting overrides receipts on a recurring basis. In the general fund, overrides receipts are subject to reversions at the end of the fiscal year. Generally, overrides receipts should be budgeted on a non-recurring basis, and it may be unclear that excess revenue will continue to be collected. Realigning available receipts to cover overexpended state appropriations supported expenditures. Receipts such as federal funds are restricted and cannot be used other than what they were designated for. Budgeting overrides receipts that will not be spent. Overrides receipts only need to be budgeted if the agency is expending those funds. Now that we have went through the common errors that I found on budget revision, here is a list of questions to ask yourself before you submit your budget revision. Is the revision on the correct type? Does the effective date make sense with the action on the revision? Is the title sufficiently descriptive and accurate for the action on the revision? Is the correct category selected? Is the justification complete and accurate? Is the reciprocal revision justified in the justification? Have you included all the attachments that supports this revision? By doing this, will help you eliminate any delays with the revision getting approved. This is an example of a Type 12 budget revision of overrealized receipts. This is done on a non-recurring revision, and the overrealized receipts category is selected. They have the correct budget authority reference in the justification, and the proof that the funds are available is attached. So this is a good example of an overrides receipt revision. Here's an example of a lapsed salary revision that is done on a non-recurring basis. The correct category is selected. They have the budget authority reference in the justification, and the 701 and analysis of the funds that are available to be budgeted is attached. So here's another example of a correct Type 14 lapsed salary revision. Before approval of revision, the OSBM budget analyst must fully understand the request, the legal authority for the request, and that the revision is technically accurate. Why does this matter? It is our mutual interest to review and make the approval more quicker, to minimize the follow-up effort and make sure all the information is there. Because this is an official system of record. IBIS is an historic record of why the revision was approved. And also, budget revisions are subject to audit requirements. And a good rule of thumb to make sure for someone other than yourself be able to understand what is being accomplished and the budget authority for the change when reviewing the budget revision. I'll turn it back to Taylor for additional resources.
That concludes the training for today. Thank you for listening in. On the next couple of slides, we've included links to a couple of resources. This includes the First Friday training page on OSBM's website, which is where this presentation, as well as all other First Friday training materials, will live. Additional links for the State Budget Act, GS 143C, powers and duties of heads of principal departments that we discussed previously, and GS 143B, and the state budget manual, and other job aids. Additionally, your most important resource is your budget execution analyst at OSBM. We have listed on the next couple of slides your analyst assignments for each agency. If you have any questions, please don't hesitate to reach out to your budget execution analyst, and we can provide any help to your agency. Thank you again for joining.